The IRS 1099C is very tricky. It is for cancellation of debt. Does that mean if you submit the 1099C to the IRS will forgive your debt, your loans, your credit cards? And if you saw it somewhere on TikTok or YouTube, whether to fill it out so you can have your debt forgiven no matter what it is, this is claimed throughout many different experts everywhere. It's extremely important that you never do this with the 1099C. But what the 1099C cancellation of debt is, it's whenever a lender forgives your debt. They report that amount to the IRS, generally what's over $600. The 1099C that you receive is taxable income to you. That's right. That is the way the law is written, which is extremely unfair. The people that get hit with this the most are people that go through foreclosures with houses or some kind of big debt that gets forgiven and you get slammed with a huge tax bill. But of course, that's the general law and there are exclusions. So generally speaking, if you do get a 1099C, you're supposed to include that amount into your tax return. But wait a minute, there are exclusions? Yes, there are different types of exclusions. The first exclusion is if you were insolvent. Insolvency means if you were completely upside down in your finances. That means your expenses and your net equity and assets are much less than the fair market value of your assets and your income. There is a worksheet provided, and I can provide the link below where you can able to access a worksheet of insolvency. The other part of it's tied to a fair market value of an actual property. You could include the basis and certain items to be excluded, and the net amount, if it's a positive amount from the 1099C, that's the part that's taxable income and all disclosed in the tax return. Now, even if you were insolvent, you're supposed to put the gross amount within the tax return. You disclose it all on Form 982 with the IRS, and it's just a part of the tax return. Some of the lenders that issue out the 1099C to you would be mortgage and banks when you get foreclosed upon. If you got a timeshare where you got out of the loan, repossession of cars, credit cards where the lender forgave the balances or they wrote off the balances that you owed on. One issue with the 1099C, if you never included it on your original tax filings, you might get a letter known as a CP2000 from the IRS, and the IRS automatically just adds the full amount on your taxes, makes the changes, add tax interest penalties to your account. If you ever get this, you have to reply back with the letter with your own exclusions and calculations for the 1099C exclusions. And sometimes it's common for you not to get the letter, especially if you went through a foreclosure, the lender doesn't have your new address, so they mailed it out to the old address and you never received the 1099C. One way to prevent this problem before you do your tax filings is to always get a copy of your wages and income transcript by the IRS. And of course, if you're dealing issues with tax problems, 1099Cs, CP2000s, let me know. I can provide a free case review.